Hi, beauty entrepreneurs. It's Kanisha, the Beauty CPA, and I am here to talk to you about tax loopholes. And I have like one of my favorite to introduce to you today. This week is tax loophole week. Yesterday, I gave you guys a pop quiz. I wanted to know if you knew what a tax loophole was because the consensus is it's a bad thing, right? And people really shy away from it because they don't want to be doing anything illegal. But I wanted to come and kind of introduce to you all to this week a new mindset around tax loopholes. It's not anything illegal I'm going to be providing to you this week, okay? And I don't want you guys to think of tax loopholes as anything bad or illegal. Tax loopholes are here and available to us to save money on taxes. And that's just what we're going to do. Tax loopholes are tax deductions and tax credits that help us save money on taxes. Now, they become controversial when they are exploited in ways that maybe the lawmakers did not intend for them to be used. However, as long as that deduction or credit is still written in the tax law and Congress hasn't changed it yet, we're still going to use it, to save money on taxes. If it was, in my opinion, if it was that, material, they'd have changed it by now. So we're going to change our mindset. We're going to start learning and taking advantage of all the tax loopholes out there because I want to encourage you to save more of your hard-earned money, by being just a little bit more aggressive when it comes to your tax position. So hello to everybody that's coming in. If you have any questions or comments along the way, feel free to drop them. If you're here live or if you're watching on the replay folks, I am going to get back to you as soon as I can. If you are shy, feel free to shoot me a DM. We can connect and we can talk one-on-one about your situation privately. Okay, so let's get into it. I promise this won't be long, but it will be good. Okay, so the tax loophole we're talking about today is the Augusta Strategy. The Augusta Strategy, right? Yes, so it is Augusta as in Augusta, Georgia. And I'll give you a little bit of the backstory, right? So I guess they used to have, or I don't know if they still do or not, but there's a big golf tournament, the Masters, that are hosted in Augusta, Georgia. Augusta is a very small town in Georgia, about 200,000 folks. And what the people would do there when this tournament came to take over their town for a couple weeks is they would like, okay, I've been making some money. So they would rent out their homes for people coming from all over the country and the world. They would rent out their homes to make some income, right? Tax law says that if you rent your home, your residence out for 14 days or less, the money that you collect, it's tax free. That's what tax law says. How many of you watching knew that? If you knew that, give me something in the comments. Give me a heart, give me a thumbs up, a one. If you knew that you could rent your house for 14 days or less per year, and whatever money you got, you didn't have to report it and pay tax on it, that will be awesome. But that's just the first part of what I'm about to say of how this loophole works. So if you take nothing else away from this conversation, just know you can rent your spot out for 14 days or less per tax year and not pay tax on it. Okay, so let's get into like the loophole part, right? Let's get into how this benefits you from a business perspective. So just to recap again, you can rent out your resident. This can be your main resident. This can be your vacation home, whatever. You can rent it out 14 days or less and not have to pay tax on that income, right? So let's think about it from a business perspective. Now, you can rent your residence out to your corporation. Yes, to your corporation. Corporation will pay you money that you do not have to pay tax on. On the flip side, the corporation that you own gets the tax deduction for it. So it's like a double whammy here, right? So not only are you getting tax-free rental income from the personal side, but then your business gets a tax deduction. which at the end of the day flows to you also. So that's like kind of the tax loophole part about it all. There are some mechanisms that needs to be put into place, right? So take nothing that I say and go do it yourself. Please always consult whoever you're working with for a tax. You can consult with me, or you can just don't go like mass Googling and trying to pull this off yourself, because there are certain mechanisms that you need to have in place to make sure this idea, this I won't use the word scheme because scheme sounds illegal. I'll say this plan, to make sure this plan is compliant with the IRS. You got to have certain things in place. For example, right? So how much do you charge the corporation that you own? How much do you charge them to rent out your residence? Right? Do not just think of a number. Don't just pull a number out the top of your head. You need to actually perform some research about how much it will cost if you were to rent a space from another venue in your area. So for example, some reasons why you would rent your residence to your corporation is because you have to have at least 2 board meetings a year, a shareholders meeting and a directors meeting. And then you can have any, you can have any special meeting that you want for your owners, your employees, or any prospects, right? So because of that, you would say, okay, if you as a corporation and you wanted to have this meeting, let's say at the really, really nice hotel or the really, really nice meeting facility down this road from you, and it costs, $1,500, $2,500 to do it for a 4 to 5 hour day for your meeting. Well, that's a good comp that you can use to charge your own corporation to rent from you. You have to do research. You have to do some comps to make sure whatever you're going to charge your corporation for leasing your residence, you need to make sure it's in line with the area that you live in. It can't be like, completely off the wall and like super, super expensive. Another thing is you do want to create that money trail, right? So like I said, your corporation will be renting your residence from you. So you got to give your corporation, hey, here's my, my quote, my invoice, my contract, right? It's going to seem a little weird, but then you as the owner of your corporation got to say, okay, I like the price. I agree. You got to sign it. You got to sign it. And then you'll send your corporation an invoice. And then your corporation has to pay that invoice by actually transferring money from the corporate account to your personal account. You got to create that money trail. So if the auditors come knocking, you can show, I got all my documentation. I have I have my research and my comps in place. I have my proposal, and you see here that the corporation agreed and they signed. Here's the invoice I gave this corporation, and here is them paying me, and here's it entering my bank account. You got to create all types of paper trails and money trails. But as long as you can handle that, this is a great plan for you to save money on your taxes. Okay, so again, we're talking about, it's called the Augusta Strategy. One thing I do want to point out with the new tax law, well, it's not really new anymore. It was passed in the fall of 2017, right? So the first year it was actually like in place was like 2018, and we didn't see those tax returns to 2019. So it's a couple years old by now. But just to jog your memory, it eliminated any tax deduction for entertainment. You cannot deduct any cost for entertainment. So if you plan to use the Augusta Strategy, do not consider your residence or your event or your meeting one of those entertaining events. Because as soon as you put it in that entertainment bucket, no dice, no deduction, because we can no longer deduct entertainment costs. So use this strategy for your board meetings. Use it for your shareholders meetings, your director meetings. You use it for employee retreats. You can use it as an open house for prospects to come see you, and learn more about your business. Please do not do this for the employee holiday party or the summer barbecue, because the IRS auditor would say, hey, this sounds like entertainment to me, and they would disallow all the costs, and this whole strategy just, the corporation won't get the deduction, but you will still have tax-free rental income. All right. So that is my tax loophole of the day. If you guys have any questions, feel free to drop them now. All week, we're talking about tax loopholes. Tomorrow, I'm going to come on. I'm going to talk to you about the administrative home office. Now, do not be confused. This is not the same thing as just the home office. It is key on the word administrative. And I'm going to explain that double whammy to you on tomorrow's live. The day after that, on Thursday, I'm going to talk to you about travel. How can we turn travel, personal travel, into something tax deductible for our business? We're going to talk to you about that. And then I have a bonus tax loophole for you that I'll break out on Thursday right after we talk about travel. I'm not even going to tell you what it is, but it's going to, I'm sure you've heard of it before, but I'm going to reintroduce it again because it is so commonly overlooked and is underused. It's the most, known unknown. People are just not saving as much money as they could by using this bonus loophole I'm going to talk about on Thursday afternoon. So guys, I hope that this was eye-opening for you. I hope that this was helpful for you, and I hope it's starting to kind of change your mindset around the word tax loophole. A part of me wanted to name it advanced tax planning, but that's so boring, right? I don't want to keep having tax sound like or appear boring to you all. Tax loophole sounds way better. So that's what we're going to call everything I'm talking about this week is going to be centered around tax loopholes. If you guys can think of anything that you have heard in passing about things that you can do that kind of sounds like, really, you can really do that, and you're not sure, send me a DM or drop a comment, and I'll fully explain it live on air for you guys to hear kind of like my tax professional opinion. Because you know how you're in the hair salon or you're in the barbershop and it's a lot of, yickety yakety talk, and half of it ain't true anyway. But you may have heard something that might have been legit because there's a lot of tax loopholes out there. So, thank you guys so much for joining me. Please plan to join me on the rest of the lives for the week on Wednesday and Thursday. I'm going live a little earlier. It's going to be at 11:30 a.m. Central Standard Time. And if you don't catch me live, you got the replay. But this is going to be some good money-saving tax tips for you guys this week. All right. So again, don't be afraid of the tax loophole. It's here to help you. All right. Thank you for joining me, guys. Enjoy the rest of your day.